Everybody, it's Mark Yegge. Welcome to another weekly stock market update. I'm in the middle of a restaurant, so I hope it's not too loud for you, but hope you're doing awesome. And we're having a great week, I hope. And I hope you're part of it because we are green. Let me first show you what's going on in the NASDAQ. So you can look at this chart. You can see the NASDAQ broke above its 50-day moving average, and it's held it nicely on pretty low volume, so I'm a little concerned about that. But everything else even gets better than this, right? We went green on Monday. We have a rule in our program that you have to buy something at the start of a green market. Most green markets last about 3 weeks on average. Some last like for the last 7 months. And we've had 2 greens in that period of time. And most of them lasted 30 days or something, 30 trading days, almost 45 in some cases. But in general, on average, a good green market will last 3 weeks for sure. So you want to buy something at the start of that. Maybe as it gets a little bit longer, it gets a little weaker to get in. But you're saying why we say buy something at the beginning of a green market? Because if you look at the chart below the 50-day moving average, there's lots of negative news. And then all of a sudden it goes green and you're still stuck in the negative news. And now we've had 5 days in a row above the 50-day moving average on the S&P 500. So, don't you wish you'd have bought on Monday, right? And my group, I tell you when we're going green. And you can see this. We had a gap up and then above the 50-day moving average all week on the Dow Jones Industrial Average. And then finally on the New York Stock Exchange Composite, it almost looks exactly the same, but very strong and heading up for that 18,342 level. Some of the widely held that we'll just talk about real quick. Apple is showing some really good action. It's got a couple of good crossovers going on. It's above the 50, finally above the 200. It's been a long time since we've seen that, where it's been above those things, several months. Now Apple is looking pretty good. Tesla still having its lows and trying to consolidate the gains that it made a couple of weeks ago up to that 199 level. It's given some back moving average, but the hopeful part is that it's testing it on very, very low volume. I haven't seen low volume like this on Tesla in a long, long time. And then let's take a look at NVIDIA. I know a lot of you trade NVIDIA, so you always ask me to do this. So you're seeing NVIDIA very solidly above the 50-day moving average. We have earnings in 2 weeks on NVIDIA, so be careful. You don't want to be taking too many chances on those earnings days and earnings weeks. So just be careful. But it does probably run up into that, especially in the green market. So that's really good. SMCI, which is something else I know a lot of you trade and invest in. This is a pretty weird, volatile chart. You can see it's ran up to the 1229 level and it's back down 800. So a lot of people are taking profits and it's doing some gapping. It's going to start consolidating. Remember, if you watch me every week, I talk about this consolidation that's happening between 700 and 1200. And that's typical for a stock that runs up, 3 or 4x. And SMCI is doing the same thing. And the last one I'll do here for you and let you go is Amazon. Amazon is pushing those new highs off of that beautiful hammer candle from a couple of weeks ago at 166, and now it's up at 188 or something like that. And so Amazon looks really good right now. It's got a pretty strong relative strength. There's not a lot of reasons that it's going up, except it's just Amazon, right? So, if you look back at the chart, I'm going to put the monthly just so you can see it, and I'll let you go. But look at this, don't you wish you'd have bought it back here in 2004 at $1, and now it's $200. That's a 200x just in 20 years, right? But most of us don't ride stocks for 20 years. It's just interesting that if we could just stay patient, stay in the game, and stay with good companies and be in quality, the rewards usually take care of themselves. I'm not talking about buying the S&P 500 and hoping, because with 500 stocks, you're going to get some really lousy ones that go out of business in 20 years, and you're going to get some really good ones. And then you're basically going to get a kind of an average return. I'm talking about picking good quality stocks. I like to write calls against them for income. That doesn't always help. But it does help a lot because you can hang in a stock a lot longer if you're getting some income from it. Anyway, that's the market report for this week. Thank you for joining me. Hope it wasn't too loud here at the restaurant, but I'll see you next week. By the way, I'm having something called the Income Accelerator. I hold it like twice or maybe 3 times a year, and it is it's a 5-week live training. It's a couple hours, on Wednesday nights at 8 o'clock Eastern. And I do a training with you, and I also mentor you during the 5 weeks. So you get live mentorship. I have a limitation to the number of people that I can mentor, but if you're interested in that, it starts on May 29th. You can go to our website and sign up for that. You can also, if you haven't subscribed to Insider Tips, which is my free newsletter, it's cashflowmachine.io/tips. Sign up for that. You get all these videos in one email once a week, and don't cost nothing. So you might as well do it. And then you can find out a little bit more about Income Accelerator. You can go to 5-week workshop, after the slash on cashflowmachine.io. If you want to find out more about that, or you'll see the link in the description below. Listen, thanks for joining me. I won't bug you anymore. Have a phenomenal weekend and enjoy this green market next week if you can. Until then, happy trading, and talk to you soon. Take care. Bye.